Question. Centers like maintenance department and power supply department which provide services to other departments of an organization is called dash. Operation cost center, impersonal cost center, process cost center, service cost center. Service cost center. Segment of activity of a business which is responsible for both revenue and cost is responsibility center, revenue center, profit center, cost center. Profit center. Which is not true about a profit center? Options. Segment responsible for both revenue and cost, created to delegate responsibility and measure their performance. Each profit center has a profit target. It is not autonomous. Each profit center has a profit target. Segment or unit of an organization having accountability to a higher authority for performance of function assigned and cost incurred is dash. Responsibility center, revenue center, profit center, cost center. Responsibility center. A responsibility center in which inputs are measured in monetary terms and outputs are not recorded is called dash. Expense center, profit center, investment center, none of the above. Expense center. Responsibility center in which performance is measured on the basis of return on investment. Expense center, profit center, investment center, none of the above. Investment center. A responsibility center where performance is judged on the basis of cost incurred is called expense center, profit center, investment center, none of the above. Expense center. According to CIMA England, a unit of product, service or time in relation to which cost may be ascertained or expressed is called cost center, cost unit, none of the above. Cost unit. Cost incurred in the past and has no effect on future decision making is called dash. Opportunity cost, imputed cost, conversion cost, sunk cost. Sunk cost. Costs which do not involve any cash outlay is called dash. Out of stock cost, conversion cost, imputed cost, discretionary cost. Imputed cost. The value of a benefit sacrificed in favor of an alternative course of action is sunk cost, opportunity cost, imputed cost, notional cost. Opportunity cost. If an owned building is used for a business project, the likely rent of the building receivable if let out is an example of dash. Sunk cost, imputed cost, opportunity cost, notional cost. Opportunity cost. Cost incurred due to shortage of stock is known as dash. Imputed cost, urgent cost, abnormal cost, out of stock cost. Out of stock cost. Depreciation on machinery is an example of imputed cost, opportunity cost, shutdown cost, discretionary cost. Shutdown cost. Cost incurred even after shutting down of plant or temporary stoppage of production is shutdown cost, imputed cost, opportunity cost, discretionary cost. Shutdown cost. Cost to be incurred to avoid the hampering of production is called out of stock cost, shutdown cost, discretionary cost, urgent cost. Urgent cost. Cost that arises from top management policy and controlled by the management is called expired cost, discretionary cost, standard cost, marginal cost. Discretionary cost. Cost which can be shifted or postponed to future period without affecting the efficiency of current production is called dash. Carrying cost, postponable cost, research cost, out-of-pocket cost. Postponable cost. Cost of money locked up in inventory, inventory obsolescence, etc. are examples of normal cost, carrying cost, unavoidable cost, marginal cost. Carrying cost. Cost incurred for the maintenance of inventory is called carrying cost, ordering cost, period cost, explicit cost. Carrying cost. Cost incurred for production of a new product or improved method of production is replacement cost, development cost, differential cost, none of the above. Replacement cost. Cost which is related to current period as an expense is known as dash. Implicit cost, marginal cost, carrying cost, none of the above. None of the above. Cost to be incurred at present or in future to replace an asset or material is development cost, research cost, expired cost, replacement cost. Replacement cost. Change in cost due to change in the level of activity is called dash. Marginal cost, differential cost, abnormal cost, uncontrollable cost. Differential cost. Incremental cost and decremental cost are classification of marginal cost, abnormal cost, uncontrollable cost, differential cost. Differential cost. When cost increases due to change in level of activity, such increase is known as unavoidable cost, uncontrollable cost, incremental cost, none of the above. Incremental cost. Any cost ascertained after being incurred and has no use in cost control decisions are called predetermined cost, historical cost, unavoidable cost, none of the above. Historical cost. The additional cost incurred to produce one additional unit is called incremental cost, development cost, marginal cost, cost of production. Marginal cost. Which among the following is the cost of searching for a new product or improved products or improved methods of production? Normal cost, research cost, product cost, opportunity cost. Research cost. Which of the following is correct about normal cost? Irregular and unexpected cost, charged to costing profit and loss account, part of cost of production, all of the above. Part of cost of production.